NVIDIA, well, it was $4.5 billion, but we thought it was going to be $5.5 billion. We got that wrong, but $2.5 billion might be able to repurpose. And then suddenly, out of nowhere, $50 billion. It's $50 billion. Billions. I mean, I read the question. Billions of dollars are at stake, because rather than specify exactly how many. But Jensen did specify how much is on the line here.
Yes.
When he spoke to me last night.
By the way, of course, Jim had Jensen on Mad Money. NVIDIA shares are up sharply in the pre-market this morning on the heels of that quarter. Again, Jim, $8 billion in H20s lost to China. We know that.
What was so stark was that you would think that they could, one, offer some sort of grace hopper, lesser, to them, but he said, no, Jen said, no, that's not possible. And two, you can't repurpose most of the stuff. I mean, it's just kind of a dead weight loss. I happen to think that this is the next leg in NVIDIA has to be sovereign AI or China. If they get both and the stock goes to 200. I mean, next week, I was just looking at Jensen's travel schedule. I mean, the guy is going next week to London, France, Belgium, Germany. I think that all of those places are going to have, so you're going to see deal after deal after deal, because if you don't and you get left behind, it's like not having electricity, not having water.
It's a race. It's a global race, and it's another reason why the guardrails that we've talked about are nowhere in sight. In fact, I think part of the bill, the big beautiful bill, is a 10-year moratorium on the ability of any state to even stop AI or put in AI restrictions. We are in a race. There is a view that we're in a race with the Chinese. Of course,
my God,
that is something
it's an arms
that I know
race.
you spoke to Jensen Huang about. His belief is if you don't let us into that market, then the Chinese are just going to come up with it on their own, and then they're going to potentially be in a position to compete and even dominate other markets around the world.
And well, take a listen to what he said. It's very valuable.
NVIDIA's market share in China was about 95% 4 years ago. It's about 50% today because of the limitations on the products that we sell. But more strategically, more importantly, this is very important. First of all, the China market is, of course, very large, but it's also the home of 50% of the world's AI researchers. The platform that succeeds is the platform with the most developers. Just like iPhone's successful because of lots of developers, Windows successful because of lots of developers, all these platforms succeed because there are a lot of developers. China is home to 50% of the AI researchers in the world. And so we want the world to build on American technology stack. We want every developer in the world to prefer the American technology stacks. Once that happens, the developers develop on American technology stacks. American technology stacks will run AI the best all over the world. And so that's probably the most important strategic reason to be in China, because there are so many developers there, and because the world is going to adopt technology from one country or another, and we prefer it to be the American technology stack.
Jim, how do you think that gets received at the White House?
I was thinking about that, and I said after, I said, you just had the president, the commander-in-chief, getting you very good deals over in the Gulf. Obviously, he was instrumental. Don't you think that he will somehow take umbrage to the fact that he just gave you sovereign that Biden would not let you have? Do you really think that you can come in right now and say what would be right would be that you also give us China? I don't know. That's not part of the deal.
No. All of that being said, NVIDIA was still able to put up a number that was in excess of what many analysts who follow the company have. And in fact, even the guidance, even though it may have come below some, it really didn't include necessarily. Many of them had underestimated just how big the hit would be in China.
You're talking about numbers that he's putting up. They're missing billions and billions, and it doesn't matter. And why is that? Because the sheer number of chips that he is selling and then the demand is just incredible.
All that despite the fact that I think back to China, the latest iteration of DeepSeek's model is using even less compute than the previous one. It just keeps going down in terms of the results they're able to get with less
DeepSeek this morning now approaching overall performance, now approaching that of OpenAI O3 and Gemini 2.5.
Well, I think that
with less compute, I
think what Jensen would say is, look, Blackwell Ultra is a real step function higher. Rubin comes out next year, another step function higher. What he's really saying is it's time to, it's about reasoning. Right now, when you go into the various sites, they don't really reason. They're one-off. Now, the DeepSeek is still giving you one-off. He's talking about reasoning. And reasoning cannot be done until you get to the next level of NVIDIA. Meaning that you can ask it something now and it will regurgitate and not be anything really special, or it can tell you who was the lineup in the 27 Yanks. But if you go and you say, can the 27 Yankees beat the current version of the Yankees given this? I think that if you got Blackwell Ultra, I think it would have an answer. And if you get next year's Rubin, I think the answer would be so professional that you would think, wow, it's better than anything I could ever come up with as a human.
Meantime, JPM desk this morning, this felt more like an Apple call than an NVIDIA one. The discussion was meticulously scripted, and the Q&A struck us as less expansive than previous calls. Not surprising, given the fresh memory of retribution on display in Cupertino last week.
Wow, I'll tell you, it was, well, I was actually going it over with a famous actor. I said, look at this. This is the way it have to be. This is how it's orchestrated, but it's still not even good enough. But you did have someone who used to be an analyst from Goldman who ran the call.
Right. It is interesting that you have to be very careful about exactly what you're saying. I mean, obviously, there are a lot of things at stake for this company, and they do have to, I would assume, make sure not to cross certain lines. I don't know what actor it is that you're speaking to regularly.
I'm not telling you. Toshiya. No, I speak to... What's the matter? I have people outside of the business I talk to.
I'm aware of that.
You talk to everybody. You
Walter
talk to
Goggins, Michael Chiklis.
You know what? I used to be in liberal arts. I was like a humanities guy.
Yeah, I know you were.
I like the opera. I used to go to the opera.
Okay.
All right.
Just happy
like
that
Wagner,
you're talking.
Just,
You're happy that you're talking to actors who are weighing in on the theatrical level of.
We're going into whether this call is orchestrated as well as, say, a Nike call. It used to be perfect, but Jensen's no longer just logging, throwing bombs in.
Right.
He's now in there, and his final comments are the coda correct. But what's still lacking, I think, is an orchestration of here's what we'd be like with China and here's what we would be like without. That's the crux of last night's call. And I think that what you could do if you stepped away is you could say, are we going to go Cold War? They have their nukes and we have our nukes? Or are we going to own the platform of their nukes? And I think we're going to go Cold War.
Let's turn to NVIDIA now. Shares are up, but not as much as they had been in the early going, although you see about a 4% gain. The company did post an earnings beat. It had 73% growth in its data center sales. Of course, those are the key GPUs that are powering the AI revolution. Investors also focusing on the export restrictions to the company's for the company's China-bound chips. Jensen Huang discussed the impact last night on Mad Money.
NVIDIA's market share in China was about 95%. 4 years ago. It's about 50% today because of the limitations on the products that we sell. $50 billion a year market today. It's growing just like AI is growing everywhere. Over the course of this 4 years, the president's administration, we're probably talking about a few $100 billion worth of revenues.
Joining us now, T. Rowe Price portfolio manager Tony Wang. NVIDIA is one of his firm's top holdings in your fund, Tony. I know it is as well. So first, give me your reaction to the quarter and, again, what you think the overhang will be, so to speak, from a lack of potential sales into the Chinese market, despite the sentiments we just heard from Jensen Huang.
Yeah, well, I thought that the quarter was definitely encouraging. One is that the ramp on the NVL72, the hardest product ramp, is improving, and then also demand is actually really strong and is actually probably accelerating. And so I think that's led by inferencing. You see multiple buildouts from different sovereigns, and so I think that there are a lot of positive things. I think that Jensen is highlighting, a really valid point that to stay ahead in that AI, you need to have that mind share of the world. and everyone building on your platform ecosystem. It's not just about the chips, but also the software. And so there's a virtuous cycle in terms of R&D and scale that's required. And so to me, that's probably a really valid concern. And, the U.S. Has done well by, outcompeting, different countries in providing the best technology. And I think that is what matters going forward.
Yeah, I mean, certainly it shows there seems to be no slowdown in spending, despite concerns about DeepSeek using or needing less compute, for example, and other things. I am curious, though, how you go about trying to value NVIDIA and figure out whether you still want to own it at this level. Are you going out to 28 or 29? Are you still seeing the kind of growth, perhaps, that is reflected, at least in the current price, and being a fair price for that?
Yeah, well, I think there's multiple ways. I mean, we are long-term shareholders. I think about it, take a step back. We are probably still early in the S-curve here, despite, revenues growing to, significant amounts. I think you're seeing new S-curves that kind of pop up with, the Middle East building out, autonomous driving, the shift from, generative AI, with agentic to also the physical world eventually. And I think if you look at the Mag 7, on free cash flow, NVIDIA is actually very reasonably valued. And so you look at the other Mag 7, they're spending a lot going through investment cycles. And so while you see the stock price go up a lot, the earnings multiple is actually pretty reasonable. EV to sales looks expensive because they are just so profitable. And so I think the bear case is that, they're just, the margins are so high. Like, how can this be sustainable? I think the bull case that this is an ecosystem platform company and not just a chip company.
So all the overhangs that we've seen on the stock, which sort of led it to march in place for a better part of the year, do you think they've overcome that? Whether it's the tariffs, the export controls, the DeepSeek and reduced spending appetite, the payoff, whether there's really an investment on all of this CapEx spending, whatever the bear cases have been over the last year.
Yeah, well, there's been a lot of bear cases, as you just highlighted. And so, I think that it's kind of like the market needs time to digest, and it needs to go through this kind of back and forth. And I think a lot of it could be in the rear view. Going forward, the guide doesn't include any China. But could that come back if there is, a trade deal, perhaps? And then I think that, with DeepSeek, you haven't seen an abatement in demand yet. And my view was always that, this is just like a normal part of tech cycles where costs come down and actually opens up the TAM because, the compute workload that would have taken you a year to do and millions of dollars, now you can do it in a month. So it makes it more valid and opens up new use cases. So to me, I think that, it's a long-term kind of curve that we're on probably with AI adoption, and we could still be early innings.
Yeah,
but the market will be still cyclical. I think that's the thing to remember is that, we're still in semis. If the world is cyclical, cycles are still cyclical. But if you take a long-term view, I think it's a little more clear.
Mike mentioned NVIDIA. The stock is jumping following quarterly results, but current quarter sales guidance came in a bit lighter than expected due to the impact of those export restrictions to China. Jensen Huang highlighted the lost opportunity in China on Mad Money last night. Take a listen to this.
Our president wants America to win. And he also recognizes that this is an important market. It's a very large market. And the revenues that it could generate for the United States is significant. It's just incredible. $50 billion this year. Look, we're talking about the size of a Boeing, not a Boeing plane, Boeing the company. This is an enormous market. And so I think the opportunity left behind is quite substantial. This is also an excellent way to improve our trade deficit.
Joining us this morning, Morgan Stanley analyst Joseph Moore just raised his target on the stock to 170. Joe, good to have you with us. I want to talk about some of the politics that Jensen has to thread, but bottom line on the stock, because you think the bear case is fading, yes?
Yeah, I do. I think you can see in these numbers a very clear reacceleration. We had a little bit of a pause late last year and early this year, but we're heading into this Blackwell product cycle. Some of the supply chain challenges that they have navigated as we've started to ramp these racks, we're working our way through. And I think everything gets better from here. So I think outside of the impact of the China export control, this was a very good number. It would have been a very good number relative to consensus without those impacts. And I do think that it's a story that improves over the rest of the year.
We had a discussion this morning about the sort of the nuanced view that Jensen has to take now, where he's sort of delicately leaning on the administration on China, even after they handed him some nice tailwinds in the Middle East.
Yeah, look, I think he's making his case, and I think there are very clear trade-offs that the government's going to have to think about. That, you know, if you restrict hardware sales around AI into China, it may be positive for what we're trying to do on the software side, but it does create an incentive for China to create its own ecosystem. And it does mean there's a lot of lost revenue to American companies. So I don't know how to opine on where we should land on that, but that's the case that Jensen's making, and I think he's making it pretty effectively. And we'll have to see where that lands. And then, yeah, outside of China, you know, we've had concerns about export controls really in all regions. We saw the export diffusion rules that were supposed to go into effect, that Biden put in place in January, supposed to go into effect a couple weeks ago, and they were repealed. They would have restrictions on a whole bunch of other countries, including in the Middle East. So it's China has been a little bit challenging, but we're still optimistic that there will be at least some revenue opportunities there. And then we are seeing other regions of the world that appear to be more open than maybe we feared that they were.
So you take up your price target to 170, up $10 from 160. What sort of multiple does NVIDIA deserve relative to some of the other ones that are benefiting from this kind of tailwind, like a Broadcom, for instance, which reports next week?
Yeah, so, you know, we're at $6.30 of earnings for non-GAAP for next year. So this is not a particularly challenging multiples, 24 times. The counterpoint to that is, you know, we're talking about close to $250 billion of revenue. We're talking about peak margins. And so, you know, some would argue that the multiple should be capped. I think that's probably fair relative to the peers that you described. But we're entering into a product cycle where I think there's a very high probability that those numbers can keep going up. So it is a very inexpensive stock on those numbers. And I think that, you know, relative to its own history, at least. And I think we're entering into a pretty strong period. So I like it. We like the peers as well. I mean, I think AI is going to be a strong theme for everyone. But I've been a little bit more drawn to NVIDIA because there is the controversy around the export controls, around the challenges that they've had on the supply chain. You had people go from, you know, maximum optimism to a certain amount of pessimism around this one, and they're still executing at a very high level with a lot of opportunities still in front of them.
I love your line. CEO commentary definitely aimed at politicians more than investors, sort of describes the moment that we're in right now. Joe, appreciate the help as always.
Why we're going to focus on NVIDIA. It's the biggest story in the market, moving higher, obviously, after their earnings. It has retaken the spot as the most valuable company in the market. It's up 4%. Your take on the quarter and what to do with the stock now is what?
Look, I think NVIDIA, we talked about this going into the print earlier this week. It's just in this really singular position, and everybody is aware of that. The multiple's not crazy, given how popular the AI theme is and given how badly people want to be allocated to it. So I wouldn't say like it's like this outrageous multiple on expectations. There are tons of stocks like that, and this isn't one of them. Obviously, the growth rate is decelerating. It's still incredible. It's still the most important company in the entire AI theme. It probably will be for years and years to come. We all agree with that. But, like, what are you looking for? So they guided to $45 billion in revenue for Q2. The estimate was $45.9 billion. Some of that you can blame the chips not being able to be sold in China. Fine, we all understand that. The analysts have long ago pulled all of that out of their estimates. In the end, if they can hit that number, it's great. It's just not what NVIDIA was doing a year ago, 2 years ago. So I think the stock coming back to this old high, stalling out a little bit makes sense. I'm along. I'm not going anywhere. Everything that I heard discussed in the Q&A section of the call is exactly what I would have wanted to hear as a continuing long-term shareholder. This company is just absolutely on fire.
Bryn, you know, going in, we talked to you yesterday on Closing Bell ahead of the print. And you suggested, you know, the market was going to be pretty careful about letting this stock go higher from where it was because it had such a great run. Here we find ourselves even higher. We're not that far away from a new high.
So we talked about it yesterday. The options market, I think, was pretty spot on, a plus minus 6% move. Overnight, it was up plus 6 or about 4. And I think ultimately between the run up, but also to Josh's point, where it is right now, trading close to an all-time high, I think to punch above that, you're going to need clarity around China. And whereas Jensen was really clear, I think this is the first call I've ever heard him read a script, first of all. He didn't have one extemporaneous word. It was all very scripted out. I think they're definitely treading lightly.
Is that a problem to you? I saw you're not the only one who's mentioned that. There was an analyst notation today that the call felt closer to an Apple call than an NVIDIA one for that same reason. Does that even matter?
I think if it were a consistent quarterly call that he's reading off a script, yes, it would matter, because Jensen's always so vibrant and so off the cuff. And so I think right now, he obviously owes a debt of gratitude to Trump for negotiating, with the Saudi and UAE. That was definitely has the president's handprints are, all over it, which is great. And so I think that it's appropriate right now. There's a lot going on, a lot of conversations. I think China, he was really clear, and I thought threaded the needle really well, that half of the AI researchers are in China, $50 billion market, and effectively they're cut out right now. And so I think he's really asking the president, when he says this on the call, do we want the globe to be a U.S. tech stack or a Chinese tech stack? And I think we're hopeful that it's a U.S. tech stack. And so I think that there's really good upside if you actually got, as part of the Trump-China negotiations, this reuse of the H20s, which right now are only good in China. So I think that the stock, like I said yesterday, I think it's capped out close to this level. I think you're going to have to be patient. But once again, this is a great name to add to your portfolio this year. It's a cheap stock. They're going to continue to do billions in revenue. And between Jensen and Colette, it's like Satya and Amy Hood. It's like, to me, one of the best 1-2, CEOs, CFOs out there.
Yeah, Bill, these guys have laid it out well. China issues well known. Which is why it really became, what does demand look like ex-China? That's what the market was keyed on. Jensen Huang saying, quote, global demand for NVIDIA's AI infrastructure is incredibly strong. And as AI agents become mainstream, the demand for AI computing will accelerate. And that's what everybody really has tried to push back, especially on the DeepSeek reaction, was this is going to cause more compute, not less. And he really reiterated that. 14 price target increases, 2 upgrades to buy, mostly unknown shops that did that, but nonetheless, those are the calls you get. You own the stock too.
Yeah, it is our largest position at this moment here. I really like what we heard from Jensen. Scripted or not, if there's time to script out the call, this would be it. This sort of a treacherous sort of time here, charging off the H20s, everything that's going on geopolitically. But to your point, he highlighted Microsoft deploying tens of thousands right now of their GPUs, and it's going to turn into hundreds of thousands of the Blackwells. And at that point, too, all of these hyperscalers, they are going to have to follow. I think some of the price targets raising, they're trying to just beat people to it. Yeah, I would, to Josh's point, consolidate. I think it's fair to expect that right here. Maybe, giving back some of this 135 to 155 consolidation. But I now think, a month ago, you asked me about 180. I now think 180 is the next stop up here as it consolidates. Let's talk about something else. Free cash flow. Free cash flow, $26 billion this quarter, $72 billion in the last 12 months. $13 billion they're returning to shareholders in buybacks right now. $40 billion in buybacks trailing 12 months. They're returning cash to shareholders, and that's powering the stock as well. I expect that to continue. The fact they were able to meet that expectation in revenue, $45 billion, tells you that free cash flow is coming still.
Certainly helps the semis trade, which has been on fire in the month of May after sucking wind for a while. It's the best month since May of 23, so 2 years for the SMH.
They saw data center revenue jump 73% year on year. Of course, they took a $2.5 billion hit to sales due to Chinese export restrictions and expect another hit in the coming quarter. But my next guest isn't worried about that. He says NVIDIA's core business is on fire and the stock will rally from here. Gene Munster is managing partner at Deepwater Asset Management. Gene, I don't know if you just heard that report from Christina as well about sort of the government looking to do more Chinese export restrictions for the chip design firms. But there clearly is a plan here to restrict China business. And we heard from Wang himself last night kind of reiterating why he thinks American companies should play a role over there.
Yeah, Kelly, that was the subcontext to yesterday's call, was this narrative that Jensen had. He was almost selling to investors about why the White House should be more favorable to NVIDIA and why he's doing a great job of trying to navigate that. And he really centered it on two pieces. The first is related to how they're bringing more core manufacturing, advanced manufacturing back to the U.S., of course, working with partners like TSM to do just that. And that's really critical for the White House because Trump has this belief that in the future that we need to have that critical tech built in the U.S., that we can't rely on our allies as much. And of course, much of that comes from China. And so that was one piece. And the second, he had this comment about trusting the president and that he has a vision and a plan, and I believe in it, and I trust that. And so when I think about the conversation that you had with Christina before this about what's going on with kind of the software curbs getting put in and what it means for NVIDIA is ultimately is the White House is slow playing this. But keep in mind that what matters more than bringing chips back, keeping AI out of the hands of China, what matters more for the White House is the economy. And I'm basing that on a conversation I had on Friday with a high-level former U.S. trade official and really emphasized that the importance of the economy. So in that case, I actually believe that Jensen, reading between the lines, he actually sees on the horizon some sort of resolution where ultimately that whether it's with Synopsys or what's going on with NVIDIA, that these curbs can be kind of pulled back as a point of a negotiation piece for a broader trade deal. I mean, it would make a ton of sense. That would be a big win for China. And ultimately, they're going to probably get some of this tech in some form or the other, whether it's home built or from somebody else, and might as well have a U.S. company benefit from it. And so there's a lot there. I think that the punchline here is I'm optimistic that we're actually, despite the headlines seemingly getting worse around China, I actually think by year end, this is going to sort itself out.
Yeah, if you're right, this would be a huge tailwind for them because you said, you know, if not for the China curbs, their April revenue would have exceeded the street by 8%. They took about a 15% hit to overall revenue. So if you think this gets fixed, you add that back in, plus you have Middle East demand, plus you have, you know, continued demand here in the U.S. It all sounds great, frankly. But is there a chance the Chinese are going to, look at this and say, look, even a 6 to 9 month period is plenty of time for us to continue to try to make headway with Huawei and others and kind of turn their attention towards investment there instead of in the U.S. companies like NVIDIA?
I mean, that's something that's clearly on the table. I just want to kind of test and push on the numbers there a little bit, is that if you look at where the street's at today, the changes to numbers broadly took the China H20 and kind of this low-end chip, whatever it might be, out of the numbers for the next 4 quarters. And so I think you have this opportunity where if in fact things do turn to the positive, that would be an unlock. And so I think the numbers have largely been de-risked. And there's this conversation about curbs in China. And I just want to put just the emphasis. You mentioned that 8% kind of upside to the estimates, the guidance relative for July, just so your viewers can get a sense about how big this was, is that over the past 3 quarters, they've raised guidance relative to where the street was at on average by 2%. And so we're talking about a major acceleration. I mentioned that in the context of the China conversation. What happens there is there's something much bigger happening here. And the much bigger thing is the AI build out is much earlier than what even I, who am optimistic about this, had anticipated. The hyperscalers are still only about a third of the way through. If you look at companies, industries, sovereign, that really hasn't even begun. And so I think regardless of what happens with all this trade in China, the reality is that if AI has the potential that I believe, we're going to be talking about strong growth rates for NVIDIA for the next few years, much longer than people anticipate.
Finally. Right. So, I mean, in particular, do you look at the chip rally? Do you look at NVIDIA, which is, for what it's worth, kind of coming back down to earth after that big rally on the heels of its earnings last night? I mean, is that where you would look to kind of press into, or how do you think about what the rally might look like between now and year end?
Well, I think that when markets really believe the tariff sort of story and saga is behind us, I think it's going to be a very big cyclical rally. So I'd be expecting industrials and financials and tech, especially the washed out tech, which includes the Mag 7, to really lead. But I also think that would include small caps because small caps have really been hammered by all this economic uncertainty. And so once that visibility returns, and then we think about 2026, and that's probably when the Fed is, more dovish than they are now. That's a tailwind for risk assets. So I actually think, weakness here should be bought, and I'd still be buying dips.
What have we learned from NVIDIA's results, its guidance, and actually everything that built into it? Because it felt as if we were getting a pretty decent picture thematically about where we are in this phase of AI.
I think it was sort of the culmination of a lot of things we've been hearing from all the AI hyperscalers for the last quarter. I mean, we've continued to hear this reiteration of we're going to spend, we're going to build. Meta raised its CapEx guidance last quarter, and now I think we're seeing it play through in NVIDIA's results last night, where even though we had this noise about China and how much could that impact mean, they still, I think, guided up, if you sort of parse the China stuff out, about 5%. And to put that into context, look at the last year of their sort of raises post-quarter, and they've generally been kind of flattish to 2%. So this was a pretty strong quarter over the history of what's happened more recently for NVIDIA.
And what else are we coming to know about either uptake, usage rates, how many iterations we're talking about, how clients are using this stuff, or is it just still in, look, headlong build data center mode?
I think it's mostly sort of this headlong build data center mode. But what I would say is, I mean, in Intelligent Alpha, we're actually building on this technology. So we're using all of the major large language models to do our stock analysis and portfolio creation. And I'll tell you what we're seeing is that every other week, it feels like, a new significant model release happens, and we have to kind of go and update how we use the technology. Because the updates are significant enough where we can do new things every other week. And so I think for us, we're happy to spend what we spend with the model providers. And I think they're starting to see more companies like us, and certainly individuals, OpenAI, adding 100 million users every month, it feels like right now, that are spending money as well.
Are there now kind of these sort of spin-off and knock-on plays that are worth looking at the moment, or is it still just kind of the obvious beneficiary?
For our perspective, I think semis is probably still the main place to be. And it's funny, the beginning of the year, there was this narrative about software. This was going to be the year for kind of AI and software. It just hasn't happened. I mean, you look at some of the companies, even ones that we own in our Livermore ETF, Adobe, Team, Atlassian, they haven't really shown that acceleration from AI yet. But I think that probably still will happen, but it might still be 6-12 months away. The semis are going to keep seeing this more immediate spend.
NVIDIA delivered solid results yesterday, beating estimates on both the top and bottom lines. I ran through some of the highlights in yesterday's video, and I may recap some of those highlights in this video as well, but I mainly want to talk about China's impact on NVIDIA in this video. My biggest concern heading into this earnings report was NVIDIA's next quarter revenue guidance, because we knew that NVIDIA would be restricted from selling in China, and we would also be waiting for Blackwell Ultra shipments to the Middle East to begin in Q3. And the question was, what would fill that short-term revenue gap? Thankfully, Blackwell has ramped so substantially that it was enough to prop up NVIDIA's next quarter revenue guidance, despite the China export restrictions. NVIDIA guided for $45 billion in revenue in fiscal Q2, and they said that this outlook reflects a loss in H20 revenue of $8 billion due to the export control in China. If there was no restriction on China sales, then NVIDIA would have guided Q2 revenue at a massive $53 billion. While $45 billion is not $53 billion, it is still solid sequential growth, and it is especially impressive considering everything that NVIDIA has had to deal with. Around the middle of last year, I said multiple times that I thought we could see NVIDIA's revenue growth reaccelerate once Blackwell was shipping in volume. Of course, back then, I didn't know that there would be a restriction on H20 sales to China. If there was not a restriction on China sales, then we would likely have a reacceleration of revenue growth on our hands. This is so important because if we get news in the coming months about the administration allowing NVIDIA to sell in China again, then I would expect NVIDIA stock to trade substantially higher on such an announcement. I think Gene Munster made a great point today on CNBC when he pointed out that Jensen was very deliberate when speaking about China on their earnings call. It sounded almost as if Jensen was making an appeal to the president and his administration to allow NVIDIA to restart sales to China. I don't think Jensen would have spent so much time talking about China unless he genuinely thinks that there is a real possibility of the administration reversing its stance on the China export restriction. If we get news of a China trade deal and NVIDIA being allowed to sell into China again, this stock will likely trade very noticeably higher. So be on the lookout for that in the months ahead, just in case. And as a final point on this topic, we're not talking about NVIDIA being allowed to sell their most advanced chips in China. We're talking about the H20, which is substantially lower spec compared to Blackwell. If H20 sales are allowed to start again, then that would result in many billions of dollars in revenue for NVIDIA that analysts are currently not factoring into their estimates. Regardless of the China situation, I am still very bullish on the long-term future of NVIDIA, and even more so after this earnings call. Jensen is traveling to Europe next week, and he told us on the earnings call that there are many large data center projects that have yet to be announced, and that there are many countries in Europe that are working on national AI data center projects. So be on the lookout for some positive announcements out of Europe over the next couple weeks. We have GTC Paris in June with a keynote from Jensen on June 11th at 11 a.m. Central European Summer Time. That's 5 a.m. Eastern, 2 a.m. Pacific. Jensen told us on the earnings call that he will be speaking about quantum GPU computing during that keynote. I think it's safe to say that NVIDIA will play a pivotal role in quantum computing in the future, and that is very exciting. So here's the quick summary of where things stand right now with NVIDIA. AI demand is hitting record levels with hyperscalers on average deploying 72,000 Blackwell GPUs per week. NVIDIA maintains a strong competitive moat across both hardware and software, and NVLink Fusion has massive implications for NVIDIA, keeping clients within their ecosystem. And NVIDIA is still delivering performance upgrades that are so significant that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. I'm completely serious when I say that I think NVIDIA still has runway ahead of it, and I genuinely think that this company's best days are ahead. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.